Well, it's either the markets or the USDA, but volatility sure didn't disappoint today when these numbers came out, as you saw nearly a triple-digit move in the bean market and corn trading up limit, and wheat, even though it kind of had some bearish numbers, was able to follow through to the higher side as well. So, man, what an interesting market in here, and you got to expect this volatility to stick around. We just want to highlight a few points in here from this report. The first thing is we're just going to go on the June 1st stocks number. Bottom line is there just really wasn't much exciting there at all, as both corn, beans, wheat, or all three of them, I should say, not both, came in relatively close to trade's expectations. If we were just trading on this June stocks report number today, these markets wouldn't have done a whole lot. That's just the bottom line. So let's just cut to the chase and get over to where all the action's at, on the acreage side of it. And on the chart in front of us right now, we have where the March USDA report was at. As you can see, the corn, beans, wheat, spring wheat numbers. And then we have the average trade estimate where we thought things would be and actually where the numbers came in. And as you can see, where the actual numbers came in, we are pretty far off in here where we thought corn, beans, and wheat, and especially spring wheat acres are at, and from what we were hearing from producers. We got a couple theories in here, and where what we are hearing from producers is a little bit different than what's showing up on the USDA report. And what it really comes down to for us is we don't believe as a whole that maybe producers are as upfront with these surveys with the USDA as they are with people that they have business relationships with, and whether if it's us here on the marketing side of it or dealing on the crop insurance side of it, tends to that we get some fairly accurate numbers. And what we really have to keep in mind as we move ahead is recently the USDA, NASS is collaborating much more with the insurance companies, not only on yield, but also on acreage. And as we communicate with our insurance companies, they're not getting the most accurate data on all of this acreage, even though the reporting has to be done with by July 15th until the fall of the year, sometime in the September timeframe. So if what we're hearing from producers, both from a marketing and an insurance standpoint, is accurate, we think both this corn and the bean acreage numbers have got to bump higher, and the spring wheat will come lower. Time will tell in here right now, but again, as we visit with producers, we're quite confident in that statement. Now, what does this report mean when we come to the supply-demand tables? And right here, I have a corn supply-demand table out, and on the far left would be the June report. Okay, and we consolidated it down with planted acres, and then we went with our total supply, total usage, and the June crop report had ending carryout at 1.357 billion bushels. The middle line in here right now is where the acre estimate was at, what the trade was thinking. And the trade was looking for corn acres at 93.8 million acres, and then that would have projected harvested acres around 86.2. If you had used the same yield at 179.5 bushels an acre and hold all on the total usage the same, our ending carryout would have jumped almost 500 million bushels up to 1.84 billion. Now with this actual acreage estimate of 92.7 million acres, okay, and holding the yield at 179.5, production drops off almost 200 million bushels, and we got a carryout at 1.642. The question right now with the markets is, with this little bit lower carryout in here at 1.6 range, is that enough for these corn to get above $6? To me, that's the kind of the question in here right now. We did the same thing on the bean supply demand table, and what was easy to do here is the chart on the column on the far left and the column on the far right were the same, because what the USDA said the acreage was at now on this June report basically matched what they had out in March. Where the trade and us were leaning wrong is we thought that this acreage would jump around around 1 million acres, even 1.5 million, and that did not occur. So again, it comes down to this. We're probably going to look at an ending carryout of 155 million bushels. Do we need to see beans get above 14 or 14.50 a bushel? We're not doing a supply-demand table on the wheat side of it. We just didn't see many changes there. The big changes really occurred in here on the corn and soybean acreage figure. Now we had these charts out yesterday and just going to go through them again today. And yesterday we said, look, we're $5 to $6.25 on corn. This report, combination report, and weather can lead to a potential breakout. Is this report bullish enough that we need to go above 625? It's obvious to us that this report is positive enough that we're not going to go below $5 until we get much further into the growing season. But is there enough change from this report right now that we need to accelerate through 625? Our thinking sitting here today is we don't know if that's quite the case, as the weather doesn't seem threatening to us that it's going to garner new interest in here to push corn futures to new highs. We have to admit, though, we like the trade above the 40 and 50-day moving averages. That's going to give the speculators a little bit more confidence. But we're just sitting at a point right now, we just don't think either the bulls or the bears have enough traction on this thing to break us out. We could stay in this wide swinging range in here for the next 4 to 6 weeks pretty easy. And when I'm talking about a wide swinging range, 5 to 6.25 on corn. When we get over to the bean market, we're going to have a little more volatility here than on the corn side of it. I mean, we had that sharp drop down to 12.50, and we've got major resistance at 14.50. Just like corn, this report in here broke us above the 40 and 50-day moving averages to help give the technical bulls an advantage. The question is, though, is there enough gas in the tank for us to go above 14.50 with the current weather? When you look in the Canadian prairies and you look at the canola market, you would have to say, yes, this bean market should be taking off. We could run higher. When you look at world vegetable oil prices, you're looking at it saying, you know what, we probably don't have enough gas in the tank to push us up. The big advantage beans have compared to corn is there's a bigger window in here for us to rally on weather. Again, I don't see this numbers in here bullish enough that we got to go and make new highs, okay, that we're going to get above 1450 or 1475. On the other hand, though, this report does offer a layer of support, and until we get into the early August time frame, breaks down to the $13 range, should be well supported. The one thing we have to say with this report, though, is that the markets are probably going to hold together and that we're still going to have opportunities down the road. Now, in hindsight, we admit that when November of 22 beans went above $13 for a few days here about a month ago, and then it broke back, we're like, why didn't we start selling some 22 crop, okay? And now that November 22 bean contract is getting back up to that level. In the big picture, we firmly believe the world will not raise enough $8 beans, but the world is going to raise way too many $13 and $14 beans. That's where we think we may want to start looking a little bit further down the road. The other thing with the bean market, this reminds us, this volatility, why we really like having puts. When the market broke hard and went below $13, we are damn glad we had some puts in place. On the other hand, on a big bounce like this right now, if this thing gets hot, it's nice to know that we don't have all the physical beans committed. Options, even though they seem expensive, we believe are a good route with this kind of volatility. Well, this wraps up the report in here today. We'll be back next Tuesday. And again, if you have any questions, feel free to drop us an email or give us a call. Have a great day.